Good morning, everyone, and thank you for joining us this morning. Today, we are joined by Phyllis Burlage. MSATP is blessed to have Phyllis on our team. Her ability to review the mass amount of legislative bills and determining which ones will affect our members, clients, and profession is a true gift. Thank you, Phyllis, for joining us this morning.
My pleasure.
Well, before we get into what you're going to be talking about, which is the fun and exciting things down in Annapolis, I just want to bring to the attention of our members a couple of issues. If you guys have been watching the news, I mean, you've been hearing all about the tax refunds and how people complaining about the 8.5% decrease in their refunds that everyone is getting. It wasn't like we didn't know this was going to happen. With the withholding and the paycheck checkup that the IRS was, talking about during the summer, and which we talked about numerous times on the show. It's obvious that a lot of these individuals were not paying attention. So again, this is something that we did expect to happen, and I just think it's going to get even worse. It's not going to be a good thing. But this is your opportunity when you're meeting with your clients to make sure that you're reviewing their withholding and with them, because you don't want to be in the same situation again next year. Also, the IRS announced this last week that they expanded their eligibility for the Identity Protection Plan. They had 3 original states, which were DC, Florida, and Georgia. Now they've added 7 new states: California, Delaware, Illinois, Maryland, Michigan, Nevada, and Rhode Island. If you have some clients that are be affected by this, you can go to IPPIN tool, which will require the taxpayer to validate their identities through a vigorous process. This is not going to be easy, but I think it's a very worthwhile thing to do, especially in this area, because we're constantly hearing about people getting their identities taken. And again, a lot of our members have reached out to us about the issue on the Tax Reform Act, that within that act, there was also an area about due diligence by the tax preparer. And, a lot of our members have reached out saying, what does this entail? Well, I've reached out to the IRS, and IRS now has a video that you can view, at your pleasure. It's called Tax Reform Due Diligence Requirements for the Tax Preparer. So if you have not taken a look at that, taken and seen that, I guess, you should take the time and do that. So make sure that you take the time, and I think this is a very important issue. At this point, I want to welcome Phyllis to the program. Good morning, Phyllis. I know you've been busy since the session started, so the floor is yours.
Okay. Well, the tax season and the legislative session coincide every year. And it makes it pretty difficult for all of our members to stay on top of those Annapolis shenanigans and figure out exactly what they're trying to do to us this year. And that's where MSATP's Committees on Professional Regulation and Legislation step in. This is not just me doing this. I mean, Sandy makes it sound as though I'm the one that's reviewing all of these bills, but believe me, there is a full team that works on this every year. So our thanks to the efforts of Jim Arney, Tom Bray, Masha Pellberg, and all of the committee members, and Sandy. We're able to look at bills that could affect us and affect your clients, and both professionally and as small businesses, because we always have to remember that it's not just the taxes, it's also our position as small business owners that can be affected. As of Tuesday, a total of 2,171 bills had been introduced into the Annapolis session. This is a combination of both Senate and House bills, and it does not include joint resolutions, which it's a whole different ballgame. Of them, Jim Arney goes through them every week as they're introduced, and he identifies the bills that have a potential consequence for us. So he identified 196 bills that we might want to look at, and we categorize them. We separate them by corporate, personal, estate and tax, health insurance,
sales and use,
property, health insurance because of that big ballyhoo that happened with the HSA plans a couple of years ago that slipped under the rug for us, and small business issues. So, he categorizes them out, and then the list gets sent out to the individual members of the committee, who are each assigned a category to look at and decide whether or not it's something that we want to keep an eye on or whether we actually want to take a position on. So as of this past week, there were 71 bills that the committee decided to keep an eye on, and we've offered testimony on 9 so far. As a matter of fact, yesterday, Sandy and I were in Annapolis giving testimony on a couple of the bills that had been presented at the request of
Delegate Sue Krebs.
Delegate Sue Krebs, who was a CPA and a state delegate. So as far as the bills that are out there, there's a whole slew of bills that are trying to correct the mess that the legislature created last year by ignoring the effect of the federal tax changes. You know, Francho told them there's probably going to be a $400 million windfall to the state, and they needed to do something to keep it from hurting the Maryland taxpayers, because let's face it, that windfall was not something from the budget. That windfall came out of our pockets. And Sandy and I sat yesterday and listened to a guy who chanted, "Give me back my money. Give me back my money," over and over again to the House Ways and Means Committee. It was pretty interesting. He pretty much got a standing ovation from the people who were attending the session. So there are a lot of bills that are trying to correct that. There are also a bunch of bills dealing with the pension exclusion once again. You know, right now, certain people can exclude from their Maryland income a portion of their pension distributions. But the pension distributions are not defined to include IRAs, rollover IRAs, SEPs, simple, the whole, you know, the things that individuals save for themselves. Basically, the only pensions that are allowed to be excluded, as you all know, are based on employer benefit plans. So there's a bunch of bills out there. Some want to just include every type of IRAs. There's another bill that wants to only include rollover IRAs, so that when someone rolls their 401k over to an IRA, they don't lose that pension exclusion. There are bills that add additional beneficiaries to this kind of pension exclusion or deduction. A lot of hometown hero stuff, new definitions of who a hometown hero is, whether or not they're working as a prison guard or they're working as an EMT, you know, all of this. There's also a bill out there that would increase the exclusion over the course of years to $75,000, which would be big because, as we all know, there are a lot of retirees who leave the state and head to Pennsylvania and places where they do not tax their pensions at all or their IRA distributions. So there is a lot of that out there. We've offered some testimony on some of it, and we're tracking others to see exactly what happens.
Just on this one, isn't this the one that the governor actually had the speaker and the president put one in?
Yes.
So they're really pushing this. Yeah,
they're really pushing it. The governor put one in that defines qualified retired public safety employees as being at least 55 years of age and blah. So you know, there's a lot of detail in all of this.
Right.
But we're trying to keep track of exactly what's going to happen with it. You know, politics enters into all of this. And very often when Governor Hogan introduces a bill, it almost gets flagged by Mike Miller and Mike Bush. And it's like, oh, well, it came from the governor. We don't want it, which is kind of sad state of affairs, because I think the governor and the administration has tried to put through some legislation that would really help the Maryland taxpayers. But a lot of the legislators do not see it that way.
Yes.
Now, the other thing we were talking about, of course, is how are we going to fix the fact that there is this huge windfall to the state because of the federal tax law changes? Well, there are a number of bills down there. A couple of them want to basically change the rules so that you can itemize in Maryland whether or not you itemize on your federal return. Now, there are people out there who say, oh, it's going to create a new Maryland form. We'll have to have a Maryland Schedule A per se. But so what? You know, I mean, I think we can handle all that. And I think our software can handle it. So that would give some relief to Marylanders. There are other bills who say, there's another bill out there that says, we want you to be able to itemize as though the tax law had not changed, meaning there wouldn't be that $10,000 limitation on state taxes, on real estate and other taxes. So, you know, that would expand that so that when the state of Maryland itemized, you would actually have a bigger deduction. Then there is the idea of the standard deduction increase. Delegate Krebs has a bill in that says, well, if we can't get you to change it so that people can choose as to whether or not they want to itemize on Maryland or go with a standard deduction, if you're going to force us to do the same as we did on federal, then at least let's make the standard deduction something that actually does good for the taxpayer. So in that case, the maximum standard deduction on single would be raised to $6,000, and the maximum standard deduction for head of household, qualifying widower, and joint returns would be raised to $12,000. So that would be a big help. I mean, let's face it, the feds just about doubled the standard deduction under the new tax law, and the state of Maryland raised theirs by 12.5%. So, people really got nailed. And while we're hearing on the news all about the fact that people are upset that they're not getting the big check refund on their federal return, and we know that our clients are not paying attention to their withholding. They're not paying attention to how much they got in their paychecks every week, especially if that little additional that they were getting with lower withholding because of the change in the federal tax tables was eaten up by additional health insurance costs. And in many cases that was. So people really did not feel like they were getting more because of the change in the tax code. Well, in Maryland, we're hearing about it on the federal side. We're not hearing about it so much on the Maryland side yet. But I think that really people, when your taxpayers say, why do I owe Maryland, or why did my taxes in Maryland change? Turn around and say, because Annapolis did nothing. And that's what we told them yesterday.
Yep.
It's because you did nothing and now you have to do something. So this is what we're looking at. The bills also want to basically COLA the standard deduction if it goes up, so that there is a cost of living increase every year on the standard deduction. The feds did this years ago. Maryland did not follow suit. And it was pointed out that there were many states that immediately took action to relieve their state taxpayers of the additional burden and taxes that would be caused by the federal change, Virginia being one of them. And Maryland, where it's always, oh, we want to be the first, we want to be the ones out there, we want to lead the way, basically dragged their feet and said, oh, we can't figure this out this fast. We have to wait. So they waited. They need to do something. And I think that if you don't do anything this year, you might want to send an email to your legislator and say, do something.
Right.
Okay, off my horse. There's a bill out there to change the earned income credit in the state of Maryland and expand it so that it would people without children would also be able to get a refundable earned income credit. We've got that one out. Amazingly enough, there is a corporate rate reduction bill that's been offered that would reduce the corporate tax rate from 8.25% to 6.25%. There is also a bill by Senator Serafino to change the Maryland income tax rate to a flat 3.9%, which is kind of interesting. There is a bill that would allow cannabis growers with the new medical marijuana business that's going on in the state of Maryland. And we all know that because this is illegal on the federal return, you pretty much can't deduct your expenses.
Right.
All right. You report your income, can't deduct your expenses. So there is a bill so that growers in the state of Maryland would get a deduction for their expenses on their state return. There's a pretty interesting bill that I thought would really affect all of us. We all know that when we want to make changes to corporate bylaws, LLCs, there are all these stupid little fees that have to be paid. Just a fee to
Change the address.
Corporation.
Yeah,
change your address. Yeah.
Yes.
You want to change your address, you got to pay a fee. You want to change a registrar, you have to change. You want to de-incorporate. What is? It's not de-incorporate. What's the word I'm thinking about?
Unincorporate.
Unincorporate. I guess unincorporate would be the right word. Or get rid of your corporation. Whatever it is you're going to do, you have to pay a fee. And of course, because of that, most people don't even bother with all the fees and paperwork. They just stop filing their Form 1 and let the corporation die. So there's actually a bill out there that says no more fees. We just don't need this anymore. And it's actually SDAT that's pushing that. Now, I haven't really heard anything about where it's going. And a lot of times the legislature is not real quick to listen to SDAT. But it would be nice to get rid of all of these petty little fees that drive everybody crazy. So that's a pretty good one. Now, as far as taking care of small businesses, there are two big bills out there. One of which is the fight, of course, the fight for 15. Everybody's carrying on about a $15 an hour minimum wage. And I could probably speak for a while on this. I don't know how much time I have.
Not that much.
Not that much.
You're good.
Okay. The one of the big problems that I see with this $15 an hour minimum wage bill that's being looked at, and of course I know it is a phase in, but nevertheless that's where it's going, and then it's the minimum wage is once again going to be COLA'd, so it'll go up automatically every year, is that it is across the board. There's no small business exemption. There's no high school student exemption. There's no training wage exemption. It's basically $15 an hour minimum wage, period. That's it. This is also a bill that we have testified on, basically saying that everybody knows you have to pay well to get good people. And I'm sure that there are very few of us in our practices who are paying someone less than $15 an hour right now, unless it's a student intern who's coming in and trying to learn how to do a bank reconciliation or a payroll tax return or any of those things that they're not taught in college. You know, they may be able to do earnings per share, but I don't think most of us need that in our practices. Mm-hmm. So if this goes through, those interns are also going to have to be paid $15 an hour. So you're basically talking about paying somebody who knows absolutely nothing $30,000 a year. I've seen kids, we used to have a guy down at our local 7-Eleven who was kind of like known. Parents would send kids to work for him because he was known for training kids on how to go to work. All right, yeah, you have to take a shower in the morning. Yeah, you have to dress. No, you can't wear flip-flops all through the place. You know, you have to be on time. I mean, because a lot of kids, face it, they have no idea how to go to work in the morning. And because one of the side effects of there not being any uniform or dress code standards in schools is that most of them don't even have an appropriate wardrobe for going to work in an office. I mean, they just don't. I mean, I can remember hiring kids and it was like, no, you can't come to work in flip-flops and shorts every day. This isn't high school anymore. Mm-hmm. You know, you're coming to an office and you have to dress appropriately. So this $15 an hour thing, I think, is a problem. We've seen the effects of it on the West Coast, where it has basically meant that people are saying, if I got to pay $15 an hour, they're going to have skills. I'm not paying $50 an hour for an unskilled worker. And then you all know that once the river goes up, it raises all the boats. So the people that are already making $15 an hour, what are you going to do with them? So this might be another one where you want to put your oar in the water and talk about, you know, this is, you know, really going to have a bad effect on my small business clients. Maybe not on me personally, but on my small business clients. Then one of the other bills that came through this year that I think shocked everybody wants to establish a fund very much like the unemployment fund, unemployment insurance fund. Mm-hmm. And this would be a family leave fund. Now, as it was presented to the House, both employees and employers would be assessed a contribution rate, percentage of payroll that would be contributed to this new division underneath the Maryland Unemployment Insurance Division that would pay out benefits to people who need to take, family leave for various reasons, to care for a relative because of the birth of a child, adoption. Mm-hmm. There was a thing about attending school events or attending military events. Mm-hmm. I mean, they're just a laundry list of reasons why you might miss work or you might have to take off for a period of time in order, and you have no income. Now, I know, for example, I have a neighbor whose husband was diagnosed with cancer. And while he was undergoing radiation, and thankfully he's cancer-free at this point, but during the 6 months that he was undergoing radiation treatments and chemotherapy treatments and could not work, he didn't qualify for unemployment because he was not available to work. And in order to qualify for unemployment, you have to be available to work. And they were just, what good is it doing me? Well, that's the rule. That's why we have disability insurance, because if you are disabled for some reason, you collect that. This is almost going to set up a whole separate insurance fund that would be like disability insurance provided by the state. And as with the unemployment insurance contribution rate, the rate would be adjusted in order to cover whatever amounts they need to put out as benefits and to cover administrative costs. Now, when the bill was presented to the Senate, it was presented as only having employee contributions, not a combination of employee and employer. And I understand that when the fiscal note came out and the committee found out that there would be an $82 million initial cost to setting this up, that there was a lot of, whoa, maybe we should think about this again. While it's not likely that this is going to go through this year, as with the Fight for 15 that we've seen, I think this is the third year that it's come through, third or fourth.
Yeah.
This is going to come back over and over again. So you need to keep in mind, if you're running a business in Maryland, do you want to stay here? Because that's a big question. We know Amazon said no. Or do you want to, start to try and say to the legislatures, I want to run my own business. I don't want you to run my business for me. And I think there's a whole lot of that out there. So, I mean, they are the main bills that we're talking about. I don't know whether anyone has any questions about anything. We've got
well, we have two regulation bills. One I don't think is going anywhere, but the one that is the big one for the CPAs is the firm mobility, and I think that's really just it's just going to be very easy.
Probably speak to that
and like I said, it just really addresses where currently we have the individual mobility. This will allow firm mobility, well,
Right.
which would eliminate the process of where you would have to report to DLLR if you were coming into the state. Right now, you have to report it and pay a fee.
Mhm.
This would eliminate that. So I don't think there's a problem with it, and I think that's going to go through pretty quickly.
Right.
Yeah. So and I think that's
What about the income tax board? Wasn't there a bill that had to do with the
Right.
tax board?
But that one is what it stated was that the board may look at a regulation which would allow for out of state. So right now, Oregon, California, New York has the regulation, and now Delaware too, will allow us to do a reciprocal agreement with them and allow out of state people come in to do returns without registering in Maryland. Again, that was the bill says the board may develop a regulation. So it's really not even an action.
Right.
It's just it gives them the option to look at it.
Right.
So
Right.
really nothing big
Yeah.
there.
Yeah. I know one of the interesting bills that we listened to yesterday, and literally there were three or four bills having to do with the standard deduction and the
Mhm.
itemized deduction thing. And the guy who sat there chanting, "Give me back my money," was a lot of fun. But one of the other bills that was out there that might affect you as just individuals was a bill to allow fraternal organizations to have scratch-off machines. Lottery to sell basically, the lottery takes scratch-offs through machines in the various lodges. So this isn't going to have a big thing on the Eastern Shore because many of the American Legions and such already do this. But on the Western Shore, there's that could have an effect on Elks Lodges and American Legions and such.
Right.
So we had a lot of Elks with their, secret handshakes coming in. I always think of the Flintstones and
and the big horns.
And the big horns.
We're aging ourselves here, Phyllis.
We are. What can I say?
I know.
What can I say?
Wow.
So,
a lot going on. A lot
going on.
I tell you.
A lot going on.
And it's sad. And the amazing thing is, this is not as many as last year, and it's still very big.
Yeah.
It's crazy.
2,000 bills. I mean, let's face it. It's amazing some of the stuff that's out there. It really is.
Yeah.
But if you want additional information on any of those bills or want to know who to contact or what committee might be hearing it, please feel free to contact me through Sandy's office or Sandy herself. And as I say, put your oar in the water because you can't just duck your head under the desk and hope it goes away.
Yeah.
It's not going away. Right.
Phyllis, I cannot thank you enough for the work you do with our CPR committee. Advocacy is very important. And the team we have, like you said, you, Jim Arney, the entire CPR committee keeps the members current and keeps a watchful eye on Annapolis as well as DC.
Oh, yeah.
As well as
Oh,
DC. Yeah. I'm telling you, our team of volunteers I'll tell you, they do an outstanding job. And we're always looking for additional people to help.
Oh, yes.
Again, like you said, 2,000 bills, we always can help. It's tax season. We need the help.
Right. And even when we whittle it down to only 196. That's still a lot of bills to look at.
Exactly, a lot of bills. And and even and it's interesting when I looked at a bill and Phyllis looks at a bill and then we talk about it. It's like sometimes you need to have a little chat about it because you look at it differently, and so which is really interesting. And like I said, so it's just not reading it, but just actually understanding what they're looking for. Again, in closing, I just want to thank everyone for attending the 199A webinar seminar yesterday. We had over 100 people, which is amazing during tax season. Remember, we have another event on February 27th in Annapolis. We have limited space, and it's available. You can sign up now. The topic will be IRS updates on voluntary disclosure guidance. It's a 1-hour class, and you get dinner with it. So there you go. And it's great networking. It's interesting. We look at these as the CPE, but sometimes especially now when you're in tax season and you have that unique situation, and you're like going, God, I wish I could talk to somebody about this. We're giving you that platform right here in Annapolis.
I mean, how many times it was like, how do I do this? What do they really mean? And with all of these changes, more and more that is coming up.
It was interesting. I got an email the other day and it was talking about gratitude and how important it is to say thank you. Thank you to your colleague. Thank you to your client. Thank you to your boss. Thank you to your employee. This is a very powerful word, and it's something that we need to remember to do every day. So I want to tell everybody to stay safe, and I want to wish everyone a happy Valentine's Day. I hope you get plenty of chocolate. Love chocolate. Send it my way.
I love emeralds.
There you go. And I want everyone to have a wonderful day, and we'll see you next week.
Take care, all. Happy Valentine's.